This is Daria Shabat with CorporateProfile.com reporting on the news for Friday, March 16th. The Wall Street Journal reports regulators in the U.S. and European Union are investigating Google for bypassing the privacy settings of millions of users of Apple's Safari web browser. Apple's Safari web browser is the most widely used browser on mobile devices. It is designed to block by default the kind of tracking files Google was installing. Google stopped the practice last month after being contacted by the Wall Street Journal. The investigations, which span U.S. federal and state agencies, as well as a pan-European effort led by France, could embroil Google in years of legal battles and result in hefty fines for privacy violations. The Journal in February reported that Google was using special computer code to install tiny tracking files or cookies on some people's computers, iPhones, and iPads, even if the devices were set to block this kind of tracking. The Wall Street Journal also reports a growing appetite for risk is prompting some Wall Street banks and investment firms to show interest in buying the most complex and troubled assets tied to the bailout of AIG. The $47 billion face value in assets held by the Federal Reserve Bank of New York are the same kinds of financial instruments that were at the heart of the financial crisis and caused record losses across the financial industry. Plunging values of the securities, called collateralized debt obligations or CDOs, caused AIG's near collapse and a government rescue in 2008. The $182 billion bailout was widely criticized because a chunk of taxpayer aid was funneled through AIG to large banks. Now, amid rising investor demands for riskier, higher-yielding assets, attempts by Wall Street firms to buy those same assets may spark further controversy. Banks, including Barclays, Credit Suisse, and Goldman Sachs, are among those interested in buying the complex mortgage-backed assets at around their current market value. Reuters reports as President Barack Obama moves closer to an unprecedented second release of the U.S. emergency oil stockpile in a bid to bring down near-record fuel prices, experts say dramatic logistical upheavals in the U.S. oil market over the past year may now make such a move slower and more complicated. Moving to tap the four giant Gulf Coast salt caverns that hold 700 million barrels of government-owned crude would still almost certainly knock global oil futures lower, delivering some relief for motorists and helping Obama in the November election if he can prevent gasoline from rising above $4 a gallon nationwide. I'm Daria Shabat with CorporateProfile.com reporting directly from Wall Street. Thank you for watching, and please tune in again for more hot financial news.